Bro, but find him ready. Me not tell her from me was a child me ready. The God want me same time lazy. I ain't the best so you can't spoil me, maybe you can't buy.
I'm here. Can you hear me?
Hello.
Yeah, we can hear you.
Okay.
Everybody on? How's everybody doing?
Doing great.
All
right.
We're about to get started. All right. Everybody is on. Let me see. All right, so we're gonna get started. We're gonna be using the chat, everybody. I muted everybody just so that we can get through. We are going to get started now. If everybody can hear me, just to go through it, just put yes in the chat room one more time. Just put yes in the chat room, and we can get started. All right. Everybody got their pens and pads. Everybody got their laptops or iPads. If I go too fast, let me know in the chat. You guys can just get on, and I can slow it down a little bit. I know it's a lot of information. So if you don't understand something, I can rewind a little bit so that we can get all the information that we're going to get tonight. Now, if you can, please leave all the questions till the end, if you can. If it's pertaining to the section that we're in, I'll try to fit you in. But let's try to leave it to the end so that we can get all the questions in the Q&A. All right. So what's good, everybody? Let me introduce myself to the people who don't know me. I was born and raised in Brooklyn, New York. Came to Florida when I was 19 years old. So I've probably been in Florida longer than I have been in New York now. So I consider myself a Floridian now. But born and raised in New York. I took my finance classes in the Academy of Finance first in high school, in James Madison High School. And then we got reintroduced into the finance field when the financial crisis happened. I was doing real estate. We were doing great. All of a sudden, it just switched, and now I'm in this, and I was in the finance field. So I took my Series 7 and Series 66 licenses last year, became a financial advisor, and just wanted to be able to teach more people and educate our community in this. And so I wanted to be able to have the education as well as the background. And so now I am a full-fledged financial advisor and just educating and just trying to give everybody the education to build wealth. And so this is why we're here today. I'm so thankful for everybody joining, investing in themselves, investing time in themselves. And so let's get started. All right, so I got quotes throughout my slides. I like to give some quotes. So think about this. Whoever gathers money little by little makes it grow. And this is a proverb from 13:11. This is the NIV version. But whoever gathers money little by little makes it grow. So we want to be able to be in this thing for the long term. We want to be able to know that we're going to grow our money. It's not going to be a fast thing, but it's going to grow consistently. And that's what we want to see, is consistent growth. So before I start investing every morning, I pray. I don't know if all you guys do, but I do. So I want to start this session before and pray. So if you can, let's give a prayer. Father, I thank you, Lord, for the knowledge that we're about to digest, Lord. I thank you, Father, that each and every person comes away with something new, something that's going to develop into building wealth, Lord. I thank you, Father, for generational blessings in everyone's life tonight. And I thank you, Father God, for everyone that's in this room, touch and agree that they will build their wealth, Father God, for generations to come. In Jesus' name we pray. Amen. Amen. All right, so let's get started. And before we get started, I gotta give a disclaimer, because I'm not actually giving, I'm giving you education. I want you to do your trades on your own, but I want to make sure that anything that I give is based on my opinion. And so I have to put this in. So brand disclaimer, the information which is shared in this course does not constitute financial or other professional advice. and is general in nature. It does not take into account your specific circumstances and should not be acted on without full understanding of your current situation and future goals and objectives by a fully qualified financial advisor. In doing so, you risk making commitment to a product and or strategy that may not be suitable to your needs. Tony Trade's brand accepts no liability for any loss or damage, howsoever arising out of the use of this course or reliance on the content of the course. Now, if you do agree, can you put agree in the chat so that we can move on? If you don't agree, then maybe you want to log out. But this is just a disclaimer. I'm going to give you the education. I want you to make these choices on your own. Thank you so much for agreeing. Thank you. And so this is going to educate you, and it's going to make you give you the ability to make your own choices. And that's exactly what I want, because if you make your own choices, you start to bring that education to your kids and to your surroundings, and that's how we change the culture. That's one of my hashtags, is change the culture. I want to change the culture of people from being a consumer to being a wealth builder. So today's class and agenda, we're going to go over stock basics and terminology. We're going to go over free platforms you can trade on if you don't already know, tools to research stocks, how to navigate in a bear market, which we are in now. We're in a small recession, and so we're going to have to learn how to navigate in this bear market. Then at the end, we're going to go through a live Q&A. So these are the top 4 challenges that I've had to invest in that people have been bringing to my attention. I'm going to go through each one of them, and if it's you, you can put down that number, and if all of them is you, and you can put down all the numbers. So I'm going to go through these one by one. So the first challenge is I don't know where to begin. I get this question a lot. I don't have any experience. I don't know the knowledge. I don't know where to start. So this class today is going to show you what you need to do to get started. Terminology, trading apps, and more. So that's the number one challenge that we have. Number 2 is I don't know what to buy or sell. Now, this comes up a lot because people don't understand that there's companies that trade publicly that they already using in their house. So you don't even know that Johnson & Johnson is a publicly traded company. Walmart that you use to go buy stuff, it's a publicly traded company. Microsoft that you use on your computer is a publicly traded company. And so these are things that we use every day, and this is what I suggest to people to buy to start off with. So today you're going to learn how to research and create your own investment strategy. So number 3 would be how do I navigate in a down market? So this market is kind of strange and volatile because we've been in a bull market for the last 10 years. So people don't know what it is to be in a bear market. The last time we were in a bear market or recession, it was 2008, 2009, the financial crisis. And there were plenty of millionaires made from that financial crisis. So we want to learn how to navigate in this bear market. We'll talk about today's current market and ways to take advantage of the record lows that we are seeing. Now, this past week, we've gotten what we call a bear market bounce, where it bounces and goes to highs. But I believe that in this market is going to be a W recovery, so it's going to be in the shape of a W instead of a V, or instead of a U, what people are saying, a U discovery or a V bounce back. I really believe we're going to go back to session lows, only because once we get the terminology down. But I want to just get this out there, only because when they start making earnings and when they start giving you earnings reports, we're going to see how bad the recession hit them in this last quarter, and the market is going to go down. And so we got to learn how to navigate in this market. Number 4 is going to be I don't have any access to resources. Now I'm going to show you what resources we have that you have access to. Some of them are free, some of them are paid, some of them you can just look up on YouTube and you can look it up. So I'm going to be sure to provide you some more information and classes to help you on your investment journey. So let's get started. So challenge number 1, where to begin? So what is the stock market? We're going to go in this section. We're going to go into what is a stock market terminology. How do I make money buying stocks? Which trading app do I use? How do I buy and sell stocks? Again, this is a basic course. This is a beginner's course for most people. So I have to go through this terminology. And I know you have some scholars out there that know what they're doing as far as the apps, buying and selling. But we're going to go through this first phase and then get into the rest. So what are stocks? A company is made up of thousands, hundreds of thousands, and even millions of small pieces of ownership called shares, which is also called equity. So a company is made up of thousands, hundreds of thousands, and even millions of small pieces of ownerships. We call that shares before they go on to the publicly traded market. So it's called equity in the beginning. Each share represents a percentage of ownership of the entire company. And then when companies are publicly traded on a stock exchange, like the New York Stock Exchange or the NASDAQ, then the shares become known as stock. So once they become IPOs, they become known as stock, or initial public offerings, where they get registered and they get sent out to the public. So now we can buy them as regular people. Then they're known as stock. So before then, they're private. Most of the private shares are owned by individuals in a company. Like, you know, when Facebook was, before it made public, they had private shares which Mark Zuckerberg and other people held. Once they had a public offering, they had millions more shares to give to the people so they can invest. So why do we invest in stocks? First of all, it's easy. Now, out of all the vehicles that we have, you know, investing in the stock market is so easy nowadays because you can have an app, you can put money in the app, you can just press the buy button, and now you're buying and investing in stocks. And you can start as little as $1. You know, a little $1.50, because they have this thing called fractional shares, which we'll get into a little later. But you can start investing at any time or at any point. You know, you don't need to have a lot of money to start investing. It's cheap, right? So that gives out, it's easy and it's cheap. There's no minimum investment, like we said. You don't need a minimum investment. If you're gonna buy a house, your minimum investment is that house, right? Whatever that 100,000, 250,000 up in New York, you know, 300,000-400,000 to buy a house. Condos are even 250,000, 300,000. So, you know, there's no minimum investment. You can start with $1 and start investing. I had somebody who started investing with $4, right? They just put in there $4, and now they had a return of 12 cents. But that 12 cents represent 3%. You tell me anywhere in any other vehicle that you can get 3% in a week. You let me know that, you know. So stock market, there's no minimum investing. You're gonna earn some kind of return. You can also get free money for retirement, which, you know, they have vehicles like IRAs, where you can throw your money into an account and that'll be it'll grow tax free until the end. Or you can have it grow and then there won't be no tax burden at the end. You can also get tax advantages using your 401k. Now, when I talk to my client as a financial advisor, that is the #1 way that I say to invest in the stock market. Why? Because you can write those off on your taxes each year. So if you earn an income, let's say 100,000 or even 70,000, and you need a vehicle to grow your money, and your company offers a 401k, put as much money into that 401k as you can, because then that will lower your tax bill, and then in return, you will get tax advantages. So you want to be able to invest in your 401k first, then you can start investing in other vehicles. Terminology. Let's go into some terminology. What did I say before? A bear market. So a bear market is trading talk for the stock market being in a downtrend, which we are right now, or a period of falling stock prices. This is the opposite of a bull market. And what is a bull market? A bull market is when the stock market as a whole is in a prolonged period of increase in stock prices, which is the opposite of a bear market. So I said for the last 10 years, we were in a bull market. The market just kept going up and up. We might have had some blips along the way, but we had where it was just kept consistently going up for the last 10 years. So that was the bull market. Now we're in a mini bear market, or we call it a recession. More terminology, averaging down. This is when an investor buys more of a stock as the price goes down. This makes it so your average price decreases. Now we want to be able to, we're going to get into this more in the how to navigate in a bear market, but this is a term that you want to learn, because if you bought a stock, let's say you started buying or invested stocks before this whole thing went down, your average price is probably higher than what it is right now. So in this down market, let's say if you owned Apple before it crashed, Apple was trading in the 300s before this crash. So now if you own Apple in the 300s, you want to be able to buy more at the lower prices to get your average price down. So you want to be able to have more at a lower price, because that's one of the ways that we make money in this market. The next way is a dividend. This is a portion of a company's earnings that is paid to shareholders or people that own that company's stock on a quarterly basis, semi-annual basis, or annual basis. Now, not all companies do this. So companies that can't afford to do this, they're not going to pay dividends. But this is the second way that you would earn money on a stock. right now in this recession, we want to be able to buy good companies with great balance sheets, and we're going to go over some of that later. But we want to buy these companies not only because of the bounce that we're going to get or the return that we're going to get once this coronavirus is stopped, but we want to be able to get paid just for owning the stock. How many of you want to get paid just for owning something? You get a share of the profit. So you want to be able to get these stocks that are paying dividends right now and that can afford to pay dividends, not only just because they say they pay dividends, but people that can afford to pay dividends. Yield. This usually refers to measures of the return on an investment that is received from the payment of a dividend. So what does that mean? It just means this is a percentage base, right? So it's just based on a percentage. That's your yield. That's how much you're going to get on a percentage. Your dividend is what they pay you per year, broken down into 4 quarters or semi-annually, depending on how you get paid. But a yield is the return or the dividend yield on that. Sector, you're going to hear me say this a lot. Sector is a group of stocks that are in the same business. So an example would be the technology sector. The technology sector would be Apple, Microsoft, Zoom, anything that's in the technology sector. That's what I would call technology sector. You also have the financial sector, which is banks. So Ally, Capital One, Bank of America, any one of these are in the financial sector. Then you also have retailers, which are getting hurt right now because nobody's going to their stores except for grocery stores, right? Walmart, Target, they're still good, but you got Macy's and you got, all these other stores that may not have an online presence like they used to, not like an Amazon. And so they're not getting the foot traffic that they used to have. And so they're getting hurt, but that's the retailer section or sector. So you're going to have different sectors, and you're going to hear me say the tech sector, or the bank sector, or the oil sector. They had some news today. We're going to go over that later. I think this is the last term, or maybe the second to last. The stock symbol. So a stock symbol is a 1-character to 4-character alphabetic root symbol, which represents a publicly traded company on a stock exchange. Apple stock symbol is AAPL. So that's what I would also call a ticker. So what is the ticker? The ticker is the 1 to 4 character symbol that represents this company. Now, why is this significant? Because if you're looking up a company, you always put Apple in a Google search or the searches that you can look up this company, but it's faster to put in a ticker. If you know the ticker like AAPL, it'll come up faster. If you put in MSFT, that's Microsoft. If you put in, a lot of these other ones, IBM is IBM, Zoom is ZM. So that would be the ticker for these companies. So you'd be able to research faster if you knew the ticker. All right, volatility. That's the current frame we're in. This refers to the price movements of a stock or the stock market as a whole. Highly volatile stocks are ones with extreme daily up and down movements and wide intraday trading ranges. This is often common with stocks that are thinly traded, so that means low volume, or have low trading volumes. So companies that don't buy or sell that much, usually has a lot of volatility. This is also common with the stocks that I trade. I trade highly volatile stocks. I try to trade stocks that's gonna move. Tesla is one of those examples. Tesla can move up in one day, $70, $80 in one day. So you can make $70, $80 on Tesla in one day, or you can have the flip side and lose $70 to $80. So that's what I mean by volatility, right? It's going to move on you. It's going to go up. It's going to go down. It's going to go, however much higher. But those are the stocks that I like to trade on a daily basis because they give me movement. Now, my long-term stocks, normally I don't look for highly volatile stocks on my long-term, but you're going to have a couple in there because the tech sector is really volatile because they tend to move faster. All right, so let's go to one of the basic questions and one of the biggest questions. How do I make money buying stocks, right? So first way you make money buying stocks is the stock price goes up. So example is you buy 100 shares at $10, your stock goes up to 20, your profit is $1,000. Because of the $10 price movement, you made $1,000 profit because of your average price. Your average price is $10, you buy 100 shares, the stock goes up to 20, your average price is still 10, so if you sell those, you get $1,000 for the 100 shares. So that's the first way you make money. The second way you make money is you get dividends for owning the stock. So if you buy 100 shares at $50, The company issues $1 quarterly dividend. So let's say they gave you $1 for each stock that you own. And if you owned 100 shares, that means you would make $400 per year, which means you make $100 per quarter. Now, this is just for you owning the stock. You don't have to do anything else. You just own the stock and they pay this quarterly dividend, and that's how you make money. So you would add this to your stock price movement, and that's how you would get your percentages. But these are the two ways that you make money. This is important because you want to look for dividend stocks in this time and not just growth. So stock apps to use to buy and sell stock. Now I use about 3 of these apps. I don't really use all of them, but these are the most popular. Robinhood is the first one. Robinhood I use. You can see I post on Instagram. If you follow me on Tony Trades Otero, you can see that I use this app most of the time for my short-term trading. TD Ameritrade is an app that I use to help people paper trade, to show my students. So I use TD Ameritrade a lot. I don't like Robinhood's charts. So I use TD Ameritrade or Fidelity to use their charts because I'm a technical trader. And so if you want to learn more about charting and all that stuff, you can go into my second class in the intermediates. Like I said, this is a basic course, so I can't get into that. But I use Robinhood and I use Fidelity or TD Ameritrade. Cash App, if you don't know about Cash App, they do have an investing section in Cash App. And one of the good things about Cash App is you can get fractional shares. So a fractional share is a portion of a share. So let's say you wanted to own Amazon, right? Amazon is trading, let's say, $2,000 a share. Now, I don't know about you, but I don't have $2,000 to break off into one share, right? I'm trying to maximize my money. So what I can do is I can buy $200 worth of that one share. And that's what a fractional share is. Now, you still get the upside and the downside of the stock movement, but you don't get a full share. So you would get fractional shares. Robinhood also offers that now. So you can get fractional shares in Robinhood. So all you got to do is put the actual, just the price of the stock. So if you say you wanted to put $100 worth into Amazon, you can buy $100 worth of one share. So Robinhood offers it. I know that Fidelity offers it now too. Cash App was one of the first to offer it without charging you. So that's why Cash App is up here. Now the last two, Stash and Acorn, these are up there because these are for people that can't really save. Let's say you want a budget, but you can't really save. So you go and use one of these apps. And so if you buy some coffee or if you buy something at the store, they'll take your change and put it into this app, and then you can use that to invest. And so that's why these are up there. They do charge $1 per month on the lowest scale. Now I know Stash, you can move up, and they also do some training in there. If you pay a higher price per month, they have some training classes they offer in Stash. But Acorn and Stash are the two automatic ones that people use as well. All right, so how do I buy and sell stocks? Like I said, I use Robinhood a lot on my short term, and a lot of people that I encounter have Robinhood. So that's why you're going to see me use Robinhood for these things here, because it's the easiest platform to trade for me. It's the easiest platform to trade. And so this is how Robinhood looks. So if I looked up AMD, this is what AMD looks like right now. The price is not there right now. I think it's in 48s where it closed Friday. Sorry. It closed 48 or something like that, but this is the price when I took this photo. So what you would do is you would search for the stock by the ticker or the symbol, like we said before. So it has, AAPL, AMD, it's a ticker. So it will pull up on Robinhood and it would look like this. This right here is the chart action. So you see it moves up and down. You would hit this trade button. You don't know how many people would say, I don't even know how to buy it. So you would trade, you would hit trade. After you hit trade, you would get one of these two options if you don't own if you don't own these options, right? If you don't own this stock. And so you actually buy, so you would buy shares. This trade option is for options contract, and I have training on options contract because that's what I use. That's what I trade during the week. But you have to get more in depth with options. So I don't necessarily tell people to trade options, but you can buy the stock from here. The other way you can do, what else you can do is you can hit the trade button. So this is Apple. You would hit the trade button, and if you already own the stock, this is how you would sell the stock. So now you own this stock, and now you want to hit the sell button, and then you would put the amount of shares that you own, and then you would sell. Now, you don't have to share the entire stock. You can actually, you can sell little pieces. You can sell, you can sell, let's say you own 100 shares and you wanted to sell 50, then you can sell 50 shares. You can sell 50 shares only and hold 50, or you can sell all of it. You can sell the whole thing. So that's the second way you can use. You can trade and buy, or you can trade and sell. So this is the easiest app that I can show you to buy and sell stocks. Other ones have different interfaces, but Robinhood is the one that mostly everybody has, and so this is why I put it up here. So challenge number two, what to buy and sell. How many of you have that question? If you do, put yes in there. What do I buy? I don't know what to buy. There's many people that tell me, I don't know what to buy. I have no idea what to buy. Let's think about this quote from Warren Buffett. Now, I love Warren Buffett. I've read many of his books, and I implore you to read Warren Buffett. I like his strategy. It's one strategy you can put in, but this is the strategy that I would put in. But think about this. The stock market is a device for transferring money from the impatient to the patient. That's exactly what it is. It's a device for transferring money from the impatient. So the people who want to get rich quick, the people who want to just be in here and say, I want to make money today, you're not going to make most of the money. If anything, you're going to lose a lot of the money. Why? Because you want to be able to own these stocks. You want to be able to have these stocks for years. You don't want to just have these stocks and be like, oh, I want to sell it tomorrow. These companies that we're talking about buying and selling, Apple, Microsoft, Cisco, these companies, Google, you don't want to have to sell them tomorrow because they're at a discount right now. I remember buying Google back in 2011. I bought Google for $277 a share. And today they're trading for $1,300. You know what I'll be kicking myself if I was to sell the shares. I haven't bought any more shares. I own the original 40 that I bought back in 2011, and those are what's, I'm seeing a return of over 300, 400%. And so, I'm never going to sell Google unless they go out of business, but I'm not going to sell my Google stock. That's probably one that I'm going to just give my kids. And so it's just a vehicle from transferring money from the impatient to the patient. So we're going to go over stock quotes. Now, when we research stocks, you have to look at these stats. So in Robinhood, when you pull up Apple, right, these are Apple stats from that day. What you're going to do is you're going to scroll down. And when you scroll down, you're going to see stats. So people look at this and don't know what this means. We're going to go over everything on the screen. We're going to go over today. Prices. So open is Apple's price when the market opened. So that day, Apple opened at $252.52. Now, as you can see from the last screen, it was $247 where it ended. But Apple it started at $252.52. Now, you would say, well, why does it start there and then end there? Well, during the day it trades, the price action is going to move up or down depending on, news, depending on earnings, depending on the price movement. So you're going to see it. Even before the market opens, it's trading. So the market opens for us at 9:30. If you do pre-market, it opens at 9 o'clock. But actually, it starts trading for the bigger people at 5 a.m. So it starts trading at 5 a.m. to 9. 9 o'clock is when retail investors or we can trade, 9 to 9:30. Then you'll see towards the end of the day, the market closes at 4. And from 4 to 6 o'clock, you can do some aftermarket trading as retailers. And then the market doesn't close for the bigger investors until 8 o'clock. So you'll see a lot of price movement in between there. So you will see the open price is what Apple opened that day. The high is the highest price the stock traded for the day. So that's the highest price that Apple went up for that day. And then the low is the lowest price the stock traded for the day. So $247.05 is the lowest price it traded for that day. Now, these are for between 9:30 and 4 o'clock. These are the stats. Now, they can go up and down after this, but these are the stats for 9:30 to 4 p.m., which is regular trading hours. Now, the next two ones you see down here is 52-week high and 52-week low. 52-week high shows the highest price traded within the last year. So why is that significant? Well, in this market right now, what I would do is I would look at the highest price it traded and where it's trading at right now. So the highest price it traded was probably in February before this whole coronavirus hit. And what it's trading at right now is basically the discount you're getting. So what I would do is I would subtract that and see how far it can go back to the high. The only reason these stocks are this low is because of the coronavirus. There's no other reason. There's no reason for earnings. There's no reason, because if no coronavirus existed, it would probably go higher than this. So this is the price that you would base or judge how much money you can make when the market bounces back. So when the market comes back, you will be able to make at least this price to go up. Now, after this, of course, it depends on how many people are in, how many earnings and all of that stuff. But at least you would get this much return. 52-week low. Why is that significant? It's, first of all, it shows the lowest price traded within the last year. So if Apple, let's say Apple was at 180, right? If Apple was closer to the low, that would tell you or signify that it's going on a downtrend, because now it's going to the low. The closer it is to the high, you know it'll be on a high trend. The closer it is to the low, it'll be on the low trend. And so that's why it's so significant. You want to be able to know what's the high and the low range. And then you want to be able to trade that way and say, all right, I think Apple is going to go lower because it's closer to the low. I don't feel like I'm going to buy right now. I'm going to let it go down some more and buy more. Or Apple's going to go up. This coronavirus hit. So why don't I just buy Apple and keep averaging down if the price goes lower? So matching today's price to the 52-week range can give you a pretty good indication of which way the stock price is trending, which we just explained. Volume, the amount of stock traded for the day. So this is how many shares traded in that day for Apple. It's 51.05 million shares. Now that would seem like a lot. It is a lot compared relatively to other stocks, but Apple has 4 billion shares in the market. So it's not even a percent of how many shares are out there for Apple. But the volume is important because we want to make sure that it has liquidity. What does liquidity mean? Being able to sell your stock. So let's say you own Apple, and let's say the volume was only 100,000 shares traded that day. You won't be able to sell your shares because nobody wants it, right? If in this market, buying and selling stock, everybody has to want or sell stock. So if you wanted to buy stock, somebody had to sell their shares for you to own it, because somebody owns these stocks. But in reverse, if you wanted to sell your stock, somebody would want to buy that stock. And so that's why we want to see high volume. Average volume is simply the average stock traded over time. So this would be 52 weeks. That's the average volume for Apple. Again, we want to make sure that the volume is at least 500,000 shares per day to trade a stock. We want to be able to trade a stock, we want to be able to have an average volume of over 500,000 shares so that we'll be able to sell our shares if we buy them. Market cap. It's short for market capitalization. It is a measure of a company's value at a specific point in time. So at this point in time, in this scenario, Apple's market cap is $1.07 trillion. So what is that significant for? It tells you how much the market would pay for the company at that time. So this is how much Apple is worth this day. Now it can fluctuate. Why? Because it's calculated by multiplying the total number of shares, which you can find on their website, or you can go to a website called finviz.com, and you will be able to see how many shares are out there of Apple, and then you multiply that by the current stock price. So you would multiply that by $247 for this day, 4 billion shares, and you would get the market cap of $1.07 trillion, which Apple is probably the second company to be worth over $1 trillion in last decade. Other companies, Microsoft hit it. I'm not sure if they hit it back up there, but Microsoft hit it. Google hit it as well. And so these are the $1 trillion companies. PE ratio, price to earnings ratio, lets you know how the market values a company in relation to its earnings. So what does that mean for you? Anything, now again, I told you I love Warren Buffett. So what I do is I go into, Warren Buffett talks about value investing. Value to Warren Buffett would be anything with a 20 P ratio or under. So you want to look for companies 20 price to earning ratio or under. Why? Because that would give you the value of the company. So that would give you a good value. So I would buy that company. I would buy Apple based on this because it's lower than 20. Now, PE is calculated by taking last price and dividing it by their earnings per share. So that goes back into the dividends, how much earnings it is. Now, you don't have to calculate this. I just put it out there for any of the mathematicians that I have out there, but it already gives you the PE ratio on Robinhood. And anywhere you look it up, Yahoo Finance, Finviz.com, it'll give you the PE ratio. So you can judge whether you want to buy a company on the PE ratio. So a higher PE ratio tends to mean that a company's stock price is relatively expensive. So anything over 20, you have to really either like the company or you use the company every day and know that this company is not going down anytime soon. Now, let me give you an example. If you know me for any period of time, you know that I love AMD, right? AMD is a stock that I've been trading for 5 years now. And AMD is a processing company, but not only do they do regular processing for computers, they also do video cards. And so I bought AMD when it was $1.87 a share back in 2015. On Friday's close, it closed around $47, $48 a share. And so I've been buying them since they were $1.87. Now, if you look at their PE currently, it's probably going to be in the 150 to 160 range. Now, yeah, that's expensive compared to their price. But if you know the company like I do, and you did your research, I know the CEO, I know her history, I know what the trajectory of the company, I know where they should be, and AMD should be trading in the hundreds, and they're not. So relatively to the price of the research that I've done, I love AMD, and I'm not going to sell them until they get to the hundreds. And so I'm just going to keep AMD, and I'm going to keep them. My average price on AMD right now is $4.95, and I have a lot of shares. And so that's one of the companies that I won't share. I'll probably give that to one of my kids as well. And so that's my reasoning for buying AMD. Anybody else that'll look at AMD, they'll say, man, it's expensive compared to the PE. And I'm like, yeah. And AMD, for another thing, AMD doesn't pay dividends. So I'm only counting on stock price movement right now. So that's my rant on AMD. I love AMD, but don't look at their PE if you love AMD. If you don't know them, look at the PE and say, no, they're too expensive. Dividend yield. Dividend yield is another, one of the ones that you want to look at. Dividend yield, of course, we discussed it earlier, is the amount of money a company pays shareholders over the course of a year for owning a share of its stock divided by its current stock price. And on Robinhood, you see it displayed as a percentage. So you see Apple pays 1.24% dividend. This can fluctuate based on the price. So if if Apple goes up to $300 a share, you'll probably see it at maybe under 1% or a little bit over 1%. But it rounds out to about $3 and change a share per year. And then you divide that by 4, and that's where you would get your quarterly dividend. So again, you'll see the stock quote overview. We went over the open. We went over the high, the low, the 52-week high, the 52-week low. Why do we use that as far as research? The volume, you want to be able to have over 500,000 shares traded so that you can buy and sell stock, and you won't have to worry about owning the stock. And let's say the stock goes down $20 and you can't sell it because nobody wants to buy it. You want to be able to get stock that's highly liquid. That's what we call it here, liquidity. Market cap is basically to show you how much the company is worth. PE ratio, that's one of the ones that you want to use, indicators that you want to use when you're looking at a company that, let's say you don't know them too well, or you know them and you want to see if it's a value or not. You look at this number. Anything under 20 is a value. Anything over 20, you probably got to judge it on the strength of the company itself. Dividend yield, this is important. You have Apple paying 1.24%, but you have other companies paying higher. You got Cisco paying 3.2%. You have some of the oil companies paying 6-7%. So you want to be able to judge what, and it's an investment strategy, of how, you know, how much dividend yield you want to get, because you want to do that. You want to base what you're buying in this time, in this bear market, based on dividends and stock price. So everybody's getting it? I want you to make sure, what do I buy? Yes. I want you to make sure you're getting it. So if you're getting it, put yes. If you're not getting it, if you have a question, let me know now. I can review it. You know, but that's basically what you're looking for in the stock price. We have some yeses. That's what's up. We have some yeses. All right. So this tells me I'm doing good. I'm going slow enough. You know, usually I just give a whole bunch of information. But the next section we're going to go into, all right, let me back up a little bit. All right, what to do when the market is down? Or basically in this bear market, what are we going to do when the market is down? Let's think about this. Nipsey Hussle, the marathon continues. What does that mean to me? The marathon is a long race. So we're making sure that what we're doing, we're in it for the long haul. You don't want to buy stock unless you know it's going to pop real fast. You don't want to buy stock. You don't want to hold for 5 to 10 years. You don't, you know, you got to think about it, and you got to say, man, do I want to own this company for 5, 10 years, or even 2 to 5 years? If you're not comfortable with owning that stock, don't buy it. As simple as that. Or let's say you have a change of heart. You buy it, you have a change of heart. Maybe you heard something on the news. Maybe, a perfect example. How many of you know Luckin Coffee? How many of you ever heard of Luckin Coffee? If you did, yes. If you heard of Luckin Coffee, or if you didn't, I'm going to give you what happened recently in the past couple of weeks. Luckin Coffee was a company, coffee company made in China, and they, you know, they were off and running, right? They were supposed to be Starbucks, the Starbucks of China. Now, if you know China, China has over 2 billion people that live in China. And a lot of the concentration lives in cities like Shanghai. They live in Beijing, Hong Kong. So they are, I lost big on Luckin Coffee. Exactly, man. So you know Luckin Coffee. I'm sorry that you did, that you lost big, man. But Luckin Coffee was supposed to be one of those companies that's supposed to rival Starbucks in China. So what happened recently was they went as high as $40-something a share. They were trading during the coronavirus in maybe the 20s, maybe the high teens. All of a sudden, it came out that the COO of the company, or the you know, the chief financial officer, chief operations officer, they were putting out fake financials. They were putting out financials that didn't have, I mean, they were putting out fake sales revenues and posting it, and that made their stock jump. And they found out about that. Their stock price went down from $20-something to $4.39 overnight. It dropped that big of a drop. I know people who invested tens of thousands of dollars that lost a lot of money on Luckin Coffee, and right now they're stuck. They're not even trading because they have to look into their financials. Now, a lot of companies in China, I mean, you can invest some companies in China. The only reason I wouldn't is because we don't know if what they're putting out in China is real. We don't know if they're giving you, if you go on their website, you know, that's not the Chinese website, that's the American website. So we don't know if they're trading, what they're putting out is real. So that's why you really have to believe in this company. You got to do your research in these companies from China, you know, and really know what you're buying. I know some people who try to buy the bounce, and now they're stuck in Luckin Coffee because they can't sell it, because it's not trading right now. The SEC and FINRA, which governs the you know, the financial industry, they have them on lockdown because they have to do more research on this company. So just to say that, you know, you have to believe in these companies. You got to make sure that you want to be able to be in these companies for 5, 10 years down the road, that you feel comfortable investing in these companies and the direction that they're going. So bear market tips. This is the section we're going to go into some tips of navigating this market. So what you see here, I'll put this out on Instagram as well. This is a list. This right here, it was a top 9 list. I couldn't fit it into the picture, so I broke it down to 5. This is a list of the top 5 companies with the most money in the bank right now. They had Alphabet has $103.7 billion in the bank. Now, this is after debt. They don't owe. This is after they paid everybody, the employees, their debtors. They still have $103 billion in the bank. Apple has $90 billion in the bank. Microsoft has $47 billion in the bank. Facebook has $43 billion in the bank. Why is this significant? First of all, we know that these companies can afford to be in this coronavirus. What does that mean? That means that they can get by paying all of their people, they can still make some money, and they can still pay their dividend because they have money in the bank. And those are the companies you want to invest in. These are the companies. Now I'm going to go on a little rant about the travel industry. The travel industry is a no-buy for me. Why is it a no-buy for me? Well, simplest terms I can put, they're not making any money. Nobody's going to hotels. Nobody's getting on cruises. Nobody is taking airlines or taking planes anywhere. First of all, because we're on a lockdown. Second of all, because nobody wants to be in the proximity of people anymore, social distancing. And what do these companies have in common? They try to jam-pack as many people into these spaces as possible. That's how they make money. So why would you want to invest in an industry that doesn't make money right now or hasn't made money within the last couple of months? Why do we buy companies, right? We buy companies based on what we said before, price to earnings ratio. So they have to make some money for the ratio to work. So why would you want to buy companies that don't make no money right now? And I'm not saying that it's a never a buy. I'm just saying for these couple of months, I wouldn't go nowhere near them because these companies are going to go down. You're going to see them at more of a discount. So why risk it now? Wait till it gets to the bottom. Wait till people start to get on a plane again or get on cruises or go to hotels to start buying these companies. These companies, first of all, can't afford to pay their people. Most of them are on furloughs or lost their jobs or layoffs. A lot of these companies have to take the stimulus package or the bailout, whichever one you want to call it. I call it a bailout because they need money. And second of all, in the stimulus package, if you follow the news, they can't pay dividends if they take the money. They can't pay dividends, they can't pay bonuses, and they can't do buybacks. What is a buyback? A buyback is when the company buys back shares from the public, which increases the value of a stock. So if they start to buy back, and a lot of these companies were doing it the last couple of years, they were buying back shares and putting them in a vault, is what they call it, a vault, where they can't trade those stocks anymore. Now that increases the value of stocks. So they can't do buybacks and they can't pay dividends. So why invest in these companies right now? You can buy them later when they're dirt cheap and when they're starting to make revenue. So again, that's my rant. I didn't mean to take this long, but that's all. That's my opinion. And so this is why we want to buy these companies. So navigating in the bear market, buy companies with the most money in the bank. Buy these companies. Why? Because a lot of them are on a discount. I love sales. I always buy stuff on sales. People love sales. They're buying stuff that's discounted online, clothes and stuff. I buy these companies because they're like 10, 15, 20%, even 50% off. Some of these companies are down because of the market. So why not buy companies with the most money in the bank, right? They're going to pay you. They're the ones that's going to be the first one to come out of this market higher, because the only reason they're down is because of Corona. That's the only reason, because the entire market is down. If the market was running, this thing would be up. So they're not getting hurt as much. Every company is getting hurt, but they got the most money in the bank to navigate. The second, buy companies with the most potential to recover what was lost and more. And that is the tech sector. The tech sector right now, if you look at the tech sector, a lot of these companies aren't discounted much because they're using the technology. What we're on today, Zoom. Zoom is one of those companies that is making money in this sector because they're the ones that have the technology. You have WebEx, that's another company, which is Cisco. You have Citrix that's making money. Buy companies that are being used right now at this given time. You want to be able to get into these companies. Now, some of these companies, like Zoom and them, they moved up a lot. Zoom's PE ratio was like 1,500. So, I mean, I would wait for it to come down some. But you can invest in these companies, these are safe companies. And because of the coronavirus, you got to understand that the mindset is shifted. So a lot of companies that never did work from home are doing work from home now. And they're starting to see that you can do work from home. So why not change the model right now while we're doing it? So you got to invest in these companies for the long term. Another field that you would invest in because of coronavirus is the drug market. You invest in some of the retailers. You have CVS and Walgreens that are leading the way, but you have the companies that make drugs like Gilead, like AbbVie, like Merck. A lot of these companies are making these drugs. Abbott is a company that's making the coronavirus, the tests. They're making the tests, and they actually shorten the time, because at first, the test corona would take like 15 days. Then it went down to 7. Abbott was one of the first companies to make it where you can get the test results in 15 minutes. And so you want to be able to invest in these companies that are doing stuff with coronavirus. Another field, another sector you want to look at is oil. Oil is down big time. Now, I know we're not using cars like that, but if you ever been to the pump, gas is like under $2 everywhere. I've never seen that. I haven't seen under $2 gas, man, I don't know how long. And so gas is under $2. The oil industry is getting beat down. But if you were looking at the news this weekend, they actually, OPEC, which is one of the major conglomerates of oil production, they just made a deal with the entire country, basically, to cut production of oil. So why is that significant? Because now they're cutting the production. There's going to be less oil, which what does to the price? It goes up. Because now we have to wait for demand to pick up. Once everybody starts to get out of this coronavirus and start using cars again and start traveling again, they're going to start buying more oil. So you want to get into some of the deflated, and this is one of the hardest hit industries right now. You're talking about oil companies that used to be in the hundreds, right? $100. They're trading in the 20s and the 30s right now. You got How. I just got premium. Yes. I just got premium for $1.89 in Chicago. That's crazy. $1.89 in Chicago, and it's premium. That's ridiculous. And that's why $10 billion a day cut. Exactly, Seneca. Exactly. 10 billion a barrel a day cut. That's going to make the prices go up. But you want to get into the major companies, not the smaller ones, because you have like 4 or 5 of them that already filed for bankruptcy. You don't want to get into those companies. You want to get into the major ones like the Exxons, the Chevrons, the Marathon. I've invested in this company called Halliburton. What they do is they do the shale up in North Dakota. They do the shale drilling, and they're big in that. I bought them. They were down to $4. They were like $4.80 something, and now they're trading at $8. So that's almost a 100% return that I'm making on that company. Where do I go to buy a share? Again, if you didn't catch the beginning, you can go, if you want to use the app, you can do Robinhood. You can also do TD Ameritrade, or you can do Fidelity. Any one of these apps you can use, and you can put money in there, and you can buy shares there. Now, if you didn't follow up this, or if you came in late, I can send you a little bit of information on a replay so you can catch the beginning. But you can go on Robinhood and buy these shares. Halliburton, getting back to my story, Halliburton is one of these companies that are trading. It's still under $10. I think it was like $8 right now. But they pay dividends. They're secure dividends, right? Because the oil company has money. They have stuff. But those are one of the cheapest ones, and they're high. Their 52-week high is $32. So you're talking about a $26 price fluctuation. Please send me the information. Yes, sir. Yes, sir. So look at like I told you, 52-week high compared to the price right now. It's, that's like 65% off or 60% off, something like that. And so those are one of the industries that I would invest in. Again, so going back to what we were saying, navigating the bear market. Now, when a company you purchase goes below your average price, we're going to talk about average price again. This is for people who started investing. This is for people who already had it before this whole thing started. Let's say you started to buy it, you just started to buy something. anytime you want to buy a company, now this is for averaging down, you want to be able to buy it lower, not higher. The only reason you would buy higher is if the upside is better than the downside. So if you have, let's say you bought Apple last week, it was trading at $239, right? Let's say you bought Apple at $239. I won't send you the slide, but I'll give you some information. So let's say you were buying $239. Apple is trading at $269 right now. It's not a good time to buy, right? Because your average price is $239. Why would you want your average price to go up, right? So you wait for it to come down. Now it might not come back down to $239. It might go past $239. You know, we never know. But in any event, the closer it gets to your average price, the more you'd want to buy. You want to be in there and you want to buy some more. Or if it goes below your price, because then you can average down on your price. Now, I've known people already that's averaged down and they've already made a return, their investment into this class. They've already made more than that. And so you want to be able to use one of these strategies like averaging down in this bear market. You want to be able to average down. I've been in companies where I started to buy them at 17 and they went down to 15. So I bought some more and then they went down to 11 and then I bought some more. And then now they're back to 17, but my average price is at 14. And so I made the $3 change and then I sold them. So I'm always looking for, especially in this market, you want to be able to lock in your gains. You want to be able to, not the big company, not like Apple and Microsoft. I won't sell those. I'm going to keep those. But smaller companies that you look for the upside, like a Halliburton, like Ally or Capital One, where you can get this return and you know it might come back down. You want to be able to get it. You want to be able to lock in your gains. And another reason on this slide is buy companies that pay dividends, but buy companies that can afford to pay dividends. Remember that. Just because it says dividends on Robinhood, it doesn't mean that they can afford to pay it. Right now, they say they pay dividends like Ford. Ford, before this happened, they were paying 6 or 7 or 8% dividends. About 2 weeks ago, they said, oh, well, we can't afford to pay dividends, so I'm cutting the dividend. So now they got people that have this $4 stock. They don't have a lot of upward movement because, you know, they're not making any money and they're not paying dividends. So why own the stock? You see what I'm saying? Like, you're not going to get a return right now. You'd have to hold this for a while. So there are other opportunities there to navigate through. Some more bear market tips, and this is right here is where it shows you the dividend yield on Robinhood. So if you're looking for it again, I wanted to re-show you where the dividend yield would be. It would be here on Robinhood, and what you would do is you would go to their page and then look at their financials. Every company has an investors page. You can look at their balance sheet. You can look at how much money they make. What companies pay dividends. There's a lot of companies that pay dividends. Halliburton pays dividends. All the companies that I mentioned pay dividends except for any of the retailers. I think they're cutting their dividends or they're suspending their dividends completely. Or the airlines, they can't pay dividends. The cruise lines can't pay dividends. But companies like Apple, Microsoft, Cisco, Facebook don't pay dividends because they're growth. Google don't pay dividends because they're growth. Let me see what other companies I could think of off the top of my head. The banks, they pay dividends. And remember, one thing about the banks, they're the ones that are doing the SBA loans. So they're going to make some money out of this. So that's why you want to invest in banks, because banks aren't going to lose money. They're giving the SBA loans right now at 0%, but after an amount of time, they get to charge a little bit of interest and they're going to make money. So they can still afford to pay dividends. 3M, the people that make the masks, they can pay dividends. Like I said Cisco. You have other companies, Citrix, they can pay dividends. So you look at companies that pay dividends. Just look up any company that you know. Walmart, Target, they pay dividends. They're good companies to own right now. Restate tech markets, drug markets that you mentioned a little time ago. Yes. So tech markets. Remember we talked about sectors, right? Sectors are companies that are businesses that are together or in the same field. So the tech sector would be Microsoft, Cisco, even Tesla. Tesla is not a car company. If you didn't know, Tesla is a tech company. They make cars, but they're a tech company. You also have Facebook is a tech company. So those are being a tech sector. The drug sector would be companies like Gilead, Merck, AbbVie, Abbott, any of these companies that make drugs. Procter & Gamble sometimes dibbles in that. So you got to look at these companies, but Procter & Gamble makes a lot of retail, a lot of retail stuff, but they do dibble in some drugs as well. Pharmacies like Walgreens and CVS. You can also look at the specialty market, look for, Acadia. There's a lot of companies that you can look at right now in the drug market, but look for those that are, that are somewhat in the field of Corona, so you can get a good return. So that would be the two sectors that you were stating. Disney opens at 107.92. Is this a good buy right now? No, I would not buy Disney right now. Disney is not making any money, and the only money they're making right now is in Disney Plus. Now, when they fall in the 90s or the 80s, like when I got into them, I started buying them in the 80s, $88, and that was only like 3 weeks ago. That's a good time to buy. I wouldn't buy them right now. 107 is a little bit high. I would probably wait for them to drop down into the 90s. How about CBD companies? Yeah, if you like CBD, you can get into these companies. My take on the position, I would only invest in companies that are right now in United States. It's not legal in the United States right now, so these companies can't legally sell or trade in the market federally. Now they have some states have it legal, but they're not federally legal yet. But you can still invest in these companies. The reason why I would invest in those companies, because the Canadian companies right now, they've already seen their peak. Tilray saw their peak. Aurora Cannabis seen their peak. Right now, they're trading, nearly 90% off of what they were trading 2 years ago. So why would you want to invest in those companies when you have an opportunity to invest in the smaller USA companies right now that once it does become federal, those are the ones that are going to blow. They're going to do a Tilray move and move up to $150 a share, and you can buy them pennies on the dollar right now. So look for companies that are in the U.S. right now, and the only way you can buy those, this is the only caveat, the only way you can buy those is in the over-the-counter or pink sheet markets. What are those markets? Those are the smaller markets. You can't buy those on Robinhood app. You can only buy those companies that trade on the over-the-counter or pink sheets on a bigger platform like TD Ameritrade or Fidelity or one of those Charles Schwab. One of those platforms you can buy OTC. So look for those. Usually those tickers are like 5 symbols because they're over-the-counter. But look for those companies, and invest in those if you like CBD. Other cannabis companies you would suggest. Again, I don't really know about companies right now because I'm not into that market. I'm not into the CBD market is heavy. So I'm not looking for CBD right now because you can get them at a discount at any time. They were discounted. Before, before this whole Corona thing hit. So I would get them, I can get them anytime. I'm looking at good companies, good balance sheets, money in the bank. That's what I'm looking for right now. And that's what you guys should be looking for as well. Okay. Navigating the bear market some more. Diversification. So what is diversification? All right. We can't put all our money into one stock. Why can't we put all our money into one stock? Because that gives us the biggest risk. Then we can risk, because if Apple goes bankrupt tomorrow, right? Not saying that they're not. They got $90 billion in the bank. But if Apple goes bankrupt tomorrow, you're gonna lose all your money. Just like some people who had their money invested in Luckin Coffee, they just lost all their money, right? So don't invest in one stock, one particular company. I put some here. One stock isn't enough for you sports fans. No successful sports team has one player at each position. I love saying this. If you know me, I love Michael Jordan. And Jordan couldn't win his championships without Pippen and those other guys, right? He couldn't win those. Yes, he can do 50 points a game, 70 points, whatever, but he can't win championships. You saw when he first came into the league, he couldn't win a championship with that team. The team was garbage, so he couldn't win nobody. So he had to get people in different positions to win a championship. You want to be able to get different companies so that when you have a company that's going up or a company that's going down, you have other companies in your portfolio that's going to help balance that out. Multiple stocks prevent catastrophe from having its way with your investments. Now, again, when I advise my clients as a financial advisor, I always say, all right, you need, depending on your time horizon. Now, depending on time horizon means, the amount of time you have until you retire. That's your time horizon. So if you're in the 40s like me, my time horizon to retire is in 70, and so I have about 23 or 27 years to invest. I would put more of a growth focus, but I will also buy bonds. I will also buy not bonds particularly, but I'll buy the ETF, which is an exchange traded fund. And I will buy some mutual funds so I can balance out my aggressive approach. Now I have a lot of my money in stocks, and it's because my time horizon is over 20 years. But I do have some gold stocks. I do have some, and the reason why I have gold stocks and bonds, they work inversely. So what that means is when the stock market is going up, those markets are going down. And when the stock market is going down, those are going up. So they give you a cushion. That's why I like to call it as a cushion. When you fall out of somewhere, you want a cushion to fall into. And that's what those are. So you don't invest heavily in those, but you want to be able to have enough so that in this down market, I have clients that are, instead of getting that 30, 40% drop, they have 18, they have 15%. Why? Because they bought some of those bonds and those gold stocks and those gold things where it helps alleviate some of that the bottom risk. So I said, don't invest heavily, but have some in your portfolio. Again, so you have the diversification, and then you want to be able to hold a diverse portfolio because again, it'll lower your overall risk. So there's always risk into anything. There's even risk in putting your money into a bank. Some people, they have the least amount of risk, but they still have some risk. And that's what I like to tell people. They have some risk because the bank can go belly up tomorrow too. I don't know if you saw the show Bankers. I love that show Bankers because it shows how you can own, how they owned the bank back in the 60s. But you can see that the banks went belly up because they had too many bad loans, because that's how banks make money. And so even when you put your money into a bank, there's certain kind of risk. Now it's the lowest risk, but you want to be able to know. What kind of risk you have and lower that risk. We're going to the end, guys. I'm gonna get to the question and answers, and give me a couple minutes. So navigating a bear market checklist. So this is the checklist. Your first thing is review your portfolio at least weekly. Tomorrow you're gonna start trading stocks. If you haven't already, I want you to start. I want you to get in, and I want you to start to look at your portfolio. Let's say I have a client who bought Apple, Microsoft, and Ulta, right? Because that's what they use. They have a phone, they order Amazon, and then they bought Ulta Beauty. The only stock that went down was Ulta Beauty, but she bought it because she liked Ulta, and I'm like, hey, buy what you like. Buy what you want to get into. Buy what you like. So go ahead and invest in those companies. So you want to at least review it. Now, the reason why you want to review it is because you want to ask yourself these questions. Has one of my holdings moved a lot? Now, that's a big question because let's say you owned Tesla, back in a couple weeks ago, and let's say Tesla moved up 100%, right? Now is the time where you're looking at yourself and you're like, man, is Tesla really going to move higher than here? Just based off of where it is, you want to be able to know that I'm going to sell Tesla right now and I'll buy it again once it comes down. So if one of the companies you purchase stock moves up in a price over 30 to 40% in only a couple of days, and that happens in Tesla. If it's a couple of days, you should be able to sell it and then wait for it to go down lower and repurchase it again. So that's how you lock in some of these gains, and especially in this bear market, because you're going to see, like I said before, you're going to see one of those bear bounces where it's going to bounce up maybe 1,000 to 2,000 points on the Dow, and you're going to see a return of 30 to 40%, but then it's going to come back down. And I've seen people who've done that within these travel stocks, and I'm like, great, if you made some money, get out. They didn't get out, then went down below where they bought it at, and I'm like, you should have got out in the beginning, because again, the only reason these stocks are moving is because they're, the whole market is moving. But once we start to get into earnings and the market starts to start capitulating, which is start trading in a range, then you're going to see which stocks are going to make it and which stocks are not. And so if you get those gains, lock it in, especially those high risk stocks like the travel stocks, because they're super cheap. and get out of those stocks. But you want to be able to look at it at least weekly. I look at my portfolio daily, and because I'm one of those guys, I look at it daily, and I look at what I want to sell and buy. And then another question you want to ask is, am I comfortable with these stocks? Am I comfortable with this company? Am I comfortable with the direction of the company? Am I comfortable with, any of the news that's been coming out? Or am I still comfortable with this company? I don't like the way the company's going. I'm going to sell them today. I love the way this company's going. Okay, I'm going to leave it there. So those are the questions you want to ask. Has one of my holdings moved up a lot or even down a lot? You want to be able to look at that too and say, I'd rather cut my losses than hold the stock and lose more. That's what you got to remember. You want to be able to cut your losses when you do have a loss. So ask yourself these questions. So number 4 would be where to go to help, where to go for help. Think about this. The best investment you can make is an investment in yourself, which most of you are making tonight. The more you learn, the more you'll earn. That's Warren Buffett. So think about it. The best investment is to invest in yourself. So where to go for help, right? Of course, you're here in the Tony Trades. You can get help from me. I'm always posting on Instagram. You can reach me through Instagram, emailing. You also can do one-on-ones. We have one-on-ones available if you want to go deeper into short-term trading. This is just a tip of the iceberg right here, but it gets you started. I want to get you started somewhere. So other resources, you can do CNBC. I look at CNBC, but you can also do MSNBC. You can do Fox, any of these news sites, Bloomberg. You can go to any of these sites for current news, lectures, speeches, reports, other stuff. One of the other sites I use is marketwatch.com. They give you a lot of news on businesses, any of the reports from businesses. I go to marketwatch.com. And then my favorite site to research is finviz.com. That's my favorite site. Why? Because it has current stock news. You can research, and they have these things called stock screeners where you can put parameters. So there's thousands of companies out there. How do I narrow it down to just a couple or a sector? You can do that on finviz.com. You can put in the tech sector, and it'll put up all the companies in tech. You can put in the average volume, like I told you, 500,000 or more. It'll pull up all the companies within the tech sector that trades 500,000. But you can also look at charts on FinViz. You can also get the current news on FinViz. And the biggest thing that FinViz has, it has all the financials of that company. It has how much they made in the current quarter, and how much revenue they made, how much dividends they pay, how much they had in sales, how much percentages off the 52-week high. It has so much information on there. Check that site out. It's free. They do have a premium version, but I don't even use a premium version. I use the free version. Don't worry about paying the premium. You can get all the information you need on that site. Finviz.com is a jam. Exactly. Finviz.com is the jam, man. I love that site. I use it every night. Every time I'm doing my research, I'm using Finviz.com. So, like I said, it's not an affiliate. I'm not an affiliate of Finviz. Like I said, I use it free, but that is my site. All right. So next one, step 1, if you don't have Robinhood, you can use my link in Robinhood and you can get a free stock. Like I said, this is for people who don't have Robinhood. Well, I just signed up for Robinhood, got one free stock. Exactly. So if you don't have Robinhood and you want to sign up for Robinhood and get a free stock, you can use my link. You can do that. If you don't, you can get it from my Tony Trades Instagram site. If you already follow me, share my posts, share it to people who need this information. I put out a lot of information on Instagram. So if you follow me on Instagram, know that I'm putting that stuff out daily. I'm putting a lot of information on there because I want you to get educated. Step 2, you can book a one-on-one session. It's live on my site, tonytrades.com. You can do one-on-one if you want to do go deeper. One-on-ones I do. That's when I get into options trading because I got you locked in. It's only you. I can lock you. I can show you options trading. I can show you charts. I'm a technical trader. I trade with charts. Right now, well, for my long term, you don't have to use charts. You can just throw a dart and pick a company and you're going to make a return, especially in the tech market. So, but I use charts to trade short term. I definitely do that. Yeah, I got steel stock for free. Exactly. I mean, steel is not doing well right now, but it's a free $3-4, right? You can start some stuff there, so you can start getting the stock from there. Like I said, I do one-on-ones, and I do a lot of one-on-ones. On Tuesdays and Thursdays, or I try to lock in. I try to go around your schedule, but I do one-on-ones for people who want to learn short-term trading. Which, when you see me post, I do a lot of that. I do a lot of options on short term, and that's how I'll be making my returns on short term. The next step you can do is sign up for my class for $20, Sunday, April 26th. If you want to go a step further, I've been getting asked for a lot of people going, all right, I've learned the beginners, I've started to trade, now I want to go into more. If you want to get into my 26th, the Sunday, April 26th, it's limited. I've already got people signed up for it. It's going to go more deeper into an investment strategy, short-term investing. I'm using options right now. Exactly. Options is the best thing to go if you're doing short-term trading. You can do swing trades on stock too and get a good return, but I do a lot of my investing using options. Options is its own beast. I don't want people to use options if you don't know how to use options. I want you to get some class, some knowledge. You can go on YouTube if you want to. You can go on Google. I teach the way I trade, and if you looked at my past week, I was up 400%. I started with $200, ended the week at $1,500, and so I teach people how to do that, how to trade like I do. But on April 26th, I'm definitely going to go into investment strategy. I'm going to go into some charts. I'm going to go into some trend trading. And I'm going to do some options. I'm going to go in there and do some options. You got me, bro. Thank you so much. I'll definitely go into that stuff. Like I said, it's going to be like this class. It's going to be more of a tip of the iceberg, but I'm going to give you more information again, so that if you want to do one-on-ones, we're going to go into it, and we're going to, and we're going to really get in there. I mean, when I do my one-on-ones, I give homework, I give quizzes. I want you to know this stuff, and I give you information that you can take back. Once you learn, you can teach your people. You can teach your friends. You can teach your community. That's how we do the change. All right, I got you, Angela. We have a repeat of this class. I know someone who's looking for this class before getting it that next class. Dope class, bro. Thank you so much, Seneca. Thank you. Thank you for everybody. We're going to go into Q&A right now. I think that was my last slide. Let me see. Oh, this is just payments accepted right now, Cash App. You can go on my website now. I updated my website where you can click on to do one-on-ones. And just so you guys know, I'm working on a group. Mentorship program where you can subscribe monthly, and we're gonna get 4 classes a month for $29 in a group. I'm gonna do 4 classes. I'm gonna go into different sections. We're gonna go deep. We're gonna have live one-on-ones. It's gonna be a tightly knit community. I want to do that, but I want to be able to. I'm building it out now, so it's not available right now. But it's coming. It's coming because I'm getting a lot of questions. A lot of people like, I need more. And instead of paying that price, instead of paying $20 per class, $25, you can get it for $29. And we're gonna do 4 classes each month. We're gonna have 2 with Q&As. We're gonna have 2 with lessons. I'm gonna go into options. I'm gonna go into investment strategy. I'm gonna do so much. It's gonna be so much. It's gonna be crazy, but it's gonna be there. I'm done with speaking. So let me get some questions. Guys. Let me get some questions. Okay, hold on. Let me go back because I know I missed some questions. All right. Antoine, what I'm going to do, this is my last live class, but I'm going to have it available for people who haven't joined the class to buy it digitally. So they're going to be able to get this class digitally. It's going to be the same information. So this is my last live class, but people are going to be able to get it digitally. I'm going to put it on as soon as I can. I'm going to get it available to people. Angela, I got you after we finish this class. Let me see what else. Just sign up for Robinhood. Okay, I'm just going through this, guys. Hold on. Let me see if I missed anything. Got 1 free stock. All right, cool. All right. Really appreciate the class, bro. Let me know when I can sign up for the 4 classes. Definitely. Like I said, it's going to be monthly, so it's going to be 4 classes per month. It's not going to be just 4 classes. It's going to be 4 classes per month, and it's going to be a group. We're going to have our own group in Facebook. We're going to put information. We're going to have these classes once a week, probably on Sunday. Everybody's available, and we're going to really go into deep different sections, man, and we're really going to be building this wealth. All right. What does fair value mean on Robinhood? fair value on Robinhood. Fair value is basically just saying what the market values that stock at this current price. So fair value can be, any price that it is, depending on PE ratio. That's what fair value means if you want to get into that. But like, again, I would judge it more on PE ratio myself and dividend. So, don't get into stock because Robinhood says it. Just go and do your research and get into that more. Send me the link, let me know. Definitely. What are the stocks that you mentioned in the diversification section where we can invest for cushion? And what were the examples again? All right, so you can get ETFs. You can get gold. They have one called JNUG, which is gold. You can get into some gold. You can get into some bond ETFs. I'm going to have to look up some bond. I know Vanguard and iShares have bond funds where you can get into. But, those are the cushion stocks. Gold, any of the commodities, gold, silver, any of those commodities, some oil, you can, and the bond fund is those for cushion. And all right, got your question. Very informed me. Thank you so much, E. You know how we go, man. I'm trying to give all this information as much as I can. Thank you. I'm definitely going to need a ton of one-on-one. I got you, cuz. I got you. Don't worry about it. We're going to do some one-on-ones and getting, we want you to build wealth, and I want you to be able to pass this information down to your kids. Had some technical issues in the beginning. Can you send me the info from the start? Definitely. I'll send you the info, Nakia. I'm sorry we had some technical difficulties, but I'll send you some info. What do you think of Stash? Again, Stash for me is for people that are horrible savers, that can't save, who or don't trust themselves to save. You can get it automatically in there. The thing I like about Stash is they have some kind of educational form, so you can get some education from them. I don't know if you can get it at the dollar range, but you can get it if you move up. The only setback that I don't like is that you have to pay a monthly fee, but that's how they make their money, so I can't knock them. We'd love to be a part of the monthly group. Amazing, Aisha. I will get to you that information as soon. We're building it out now, and so when we get that information, I'll definitely give it to you. You're the first class for me to share that. I have not even my 26th class knows about it. I just felt led to share it. We're building it out now, so I'll definitely get back with you. One in the monthly sessions. Thank you so much. Great class. Thank you so much, Carla. I definitely appreciate it. Appreciate y'all. I appreciate you, and you, my brother, man. I thank you. Was able to review the stock options offered through Cash App. Apple, Microsoft is listed. Is it a good place for me to start? Definitely a good place for you to start. The only thing about Cash App, it's limited. It's limited on the amount of stocks it has. But for the same thing, you can get fractional shares in Robinhood, and they offer a lot more. So if you want to get that in Robinhood, you can. You can start in Cash App. I know people who started in Cash App, so you can definitely go. Just let me know when to buy. Just let me know what to buy. Now, I want you to learn that on your own, but I have offered you some stock that I have. Like I said, some AbbVie, some Apple, Microsoft, Cisco, 3M, Citrix, Zoom when it comes down a bit. You have the oil stocks like Exxon, Chevron, Marathon, those companies. You can buy some of those. Heard of Zion Oil? Any thoughts? No, I haven't heard of any Zion Oil. I'll look into it, and I'll give you some thoughts at a later date. Any workaround for the PDT rule on? No, there's not. Unfortunately, there's not. I've been trying to look in for the PDT rule. The PDT rule is the pattern day trader rule. Now that rule is in place, and it's an SEC rule, and so they don't allow you to do more than 3 day trades per 5-day rolling period. So you can't do it. A day trade is considered you buy a stock in the morning and you sell it in the same day. That's a day trade, but there's none that I know of in Robinhood. Monthly membership, awesome. Google, Apple, Microsoft, Facebook, Cisco are some of the companies that pay dividends. Yes, definitely. Those are some of the companies that pay dividends. You would want to get into some of those. I'll definitely join. Thank you so much. Thank you so much, Samantha. Are candlestick graphs best ones to use? Yes, I use candlesticks. That's exactly what I use. There's different things in there. I can go deeper in that if we do one-on-ones, but that's what I use to trade. Good info. Thank you so much, Mike. An awesome class looking forward. Thank you so much, Nakia. Reading the candlesticks Bible to fully get everything. Yeah, candlesticks. Now, candlesticks is a big thing, right? Try to use some of the basic ones. So if you're using the candlestick, like the patterns, use some of the basic ones as first, like a doji or a hammer or the inverted hammer. Those are the ones you want to start with. don't look at all of those because it's going to get you lost. You know what I'm saying? Because there's so many, you have the rising star, you have all these different candlestick patterns. Don't use those. Just use some of the regular ones to get you started on the trend trading. That's how I trade. I've had Acorn for years. That makes money all the time. Exactly, because it invests in stocks for you, and you're not even have to put money in it. You see what I mean? You don't have to do it yourself. All it's doing is transferring in there, and it's making money. And so that's why Acorn is good for investors that don't want to do investments on their own. You can make more if you know what companies to invest in, and that's what this class is for. Because you can make more of a return in a year. You're talking about some stocks you're gonna make 30%, before next year. You know what I'm saying? So if you want to make a 30% return, you got to know which stocks to invest in. Good class. Thanks so much, Craig. Thanks. Are you into Forex as well? I trade Forex on certain occasions, but the same things that I use as far as charts, I do the same thing in Forex. So you can apply what you learn in charts and stocks right to Forex. It's the same patterns, so you don't have to worry about that. Good info. Thank you. Thank you so much. Thank you so much, Javi, for getting on here, man. We definitely got to link up. Awesome. Thank you so much, Anissa. Are Robinhood candlesticks? No. Do not use Robinhood charts. They're horrible. That's the reason why I use Fidelity or TD Ameritrade, because Robinhood, they're not good in charts. So don't worry about charts in Robinhood. Use charts on a different platform because they give you real time and they'll give you better tools. Yeah, man. All right. So it's 3 minutes. Anybody else got any other questions? She'll be worried about Robinhood being sued. No, don't worry about Robinhood being sued. If the SEC says something, or if they give you, or if there's something that the SEC presents, that would be cause to get worried. But the thing is that Robinhood has SIPC insurance, which is kind of like the FDIC insurance you have in banks. So if you have up to $250,000 in cash, or if you have up to $500,000 in both stocks and cash, you're covered by the insurance. So you don't have to worry about your money. Don't worry about your money being lost. You have insurance for that, so don't worry about it. Okay, any other questions? Anybody got any questions, concerns? If you don't, again, I have another class of 26 that's going to give you. Thank you so much, Stefan. Stefan has been on this class twice already, guys, and he's a truck driver. He be driving trucks and being on this thing on his phone, man. I love people that want to get on this stuff, that want to learn. He's trying to learn somewhere else, driving trucks, and I appreciate you, brother, for driving. Thank you so much for being one of those guys as essential worker during this time. But definitely, man, I want you to get started. I want you to be on there. The 26 is my next class, is what I'm going to start. It's going to build on this class. So again, if you want to learn, go deeper into investment strategies. If you want to go, if you want to learn more about charts, candlesticks, and trend trading is how I trade, that's the 26. And also we're going to get into some options. And so if you want more information, we definitely we still have one-on-ones. And don't forget, we have the one-on-one classes, and we're going to have that group. So whenever the group is ready, I'm going to get y'all information. If you can, give me your information on Instagram. Give me your emails if you haven't already given to me, so that as soon as this class is available, I can send you that information. Again, thank you guys so much for being on here. Thank you so much for being able to learn this stuff. And I'll catch you guys on another time. Thank you, guys.